The S&P 500 and the Nasdaq 100. Now, as we zoom out here, I'm going to tell you right now, there's something very concerning. When we look at the big picture here on the Nasdaq, it's not good. This is the daily chart, and you have a little bit of a flag performing here going into our previous level. And this pretty level here, as you zoom out, is one of the clearest levels that we've seen, and this was the problem. Could you get back over your massive level? And it's not looking too good. Your previous all-time high established 2021 on the Nasdaq. And you know what's happening here. It's very interesting that you've got really good volume at the reversal. It's what you wanted to see. But this is not good. This right here is not good going into the FOMC meeting, which is tomorrow. So this is going to be really interesting as we're going into, pretty big day. Okay. Now, a few other things that we're going to be looking at, right? Not only are you bear flagging, rejecting off of your key level. Other side of this, you had Amazon earnings. Just giving you a quick look. We're not going to break down the earnings or anything crazy, but Amazon doing decent here after hours on the earnings. It's up nice, handy. Over 175 into almost 181, killing it. We assumed Amazon's going to do good on earnings. They always do. They've just been killing it. But this is the bad one. AMD. AMD is getting its teeth kicked in. This thing's going back down to lows as we speak. And the real question is are they going to do something to get this back up? Because AMD seems like they've only had one good earnings in the past 2 years. Okay. Again, if you're looking at AMD, I think it's a longer term viewpoint. But again, they're not able to maintain the run that NVIDIA, AVGO, and these other bigger names are having. Okay. AMD just can't keep up with that performance, and they're just not that guy, if you will. So you're back down at lows. This is a major concern. If I'm looking at AMD, I'm telling you right now, potato, tomato, you're looking for the 200 SMA. Telling you right now, you have a big level down here from our Lux Algo level, but you're looking for that 200 SMA near 138. So we have a lot to cover, a lot we need to talk about. Let's jump right to it.
Speaking of trading, if you've been using a basic investing app for the past few years, I highly recommend that you step it up and graduate to a better investing platform that can grow with you, which in my opinion is today's sponsor, Moomoo. Like other platforms, Moomoo has a super intuitive user interface, really easy to use, but unlike the other platforms, they have everything that you're using right at your fingertips. Whether it be your analysis tools, up-to-the-minute live data on the markets, what's happening with options data. And it's worth mentioning, while other platforms charge a premium for the quality of data that you're getting here at Moomoo, Moomoo does not charge a dime when it comes to getting live data on the charts. So for any of you that are serious about your investment journey, Moomoo's platform is worth checking out. The link is down below. It helps me out, it helps you out. If you have any questions, comment down below. Let's get back to the video.
Off rip really quick. We're going to go over some boring stuff first. DXY, the dollar. The dollar continues to look strong going into the FOMC meeting. And if you didn't get the memo, let's just quickly go over the calendar for you. You can see as we go into tomorrow, we have ISM manufacturing, job openings will be big. But then again, you go into the end of the day near 1 p.m. Central, 2 p.m. Eastern. You get your FOMC statement and your rate decision. Rate decision is going to come out. Nothing's going to happen. But you want to hear what the Fed says, specifically Powell, about what's happening with inflation. It's stalling. Is this in his plan? What does he see happening? Now, we've seen Powell with bad data come out and say, hey, this is a part of the plan. And, that's awesome. But I think we need to prepare for the worst, right? Prepare for the worst. And if the best happens, then cool, we'll trade the upside. But there's no reason to get overconfident here, right? We knew going into this week, it would probably get maybe some upside into some chop into the Fed meeting. Now, I didn't expect, pure carnage on the day, but that's what we got, right? And we got to work with what we got. Now, we also go down into yields, the dollar looking pretty incredible. And then we look at yields, 30-year yield also ripping to the upside. So those are two bad signs. On the other side, oil, liquid gold actually is dropping. So that's also a good note there for inflation numbers. But I'm not going to just focus on that. I mean, start breaking down, we could talk, but that's where we're at right there. Now, the juicy stuff. You were wondering, Tyler, give me the good stuff. The SPY, right? As we look at SPY, we're breaking down through some of our key levels that we had. You had our 5-way level, but we didn't hold it for long, breaking back down this morning. You broke below that level, you broke below that level, and the rest was kind of history, right? You broke below 508, the same level we mentioned, right? Easy downside opportunity from there. You're kind of just breaking every level now. 497, 498 your next level, so you got to be watching that. I will say, this zone here, trade for tomorrow. I'm telling you right now. FOMC, whatever you want to do. In between 502, 502.5 down to 497.5, there's kind of nothing. pretty illiquid. Anytime you come in this range, you've quickly come down to test that next level. So a lot of volatility can happen in this range. Under 497, 498, you're looking for lows, and you break that, bad news, no good bears, dare I say. QQQ, we look here. Things get interesting here. You got right into our level. Again, I don't know who makes the levels up. They've been here. I don't know who makes them up, right? But again, you're rejected right off of our 432.6, 432.7 level, and you're breaking, pushing back down. Not good. Everything kind of lining up with the levels. Again, this is why I always say, when you're going to FOMC, you're going into earnings, stop getting aggressive, right? That's not the time to get aggressive. Is during those times after you get your reaction and you start to get a true movement on the market, okay? Now, also, too, if you're looking at our levels here, you're looking at our levels, you're looking at our volume down here. There's also a lot more indicators I don't even use, but our custom scripts, you can check them out. The link is down below with Lux Algo. Use code OD40 for 40% off. Going to give you that heads up right now. So if you want to get a little bit of an edge, a little bit of little tool tips there, special tools for special traders, right? Check them out. So again, that's what we're looking at there. Now, that's the big visual there. And again, you're seeing both narratives. So I don't like to jump on one side of the gun saying you have to get this, you have to get that, this has to happen. Now, my guess was that you were going to get some cuts going into June, July. I have had to take a step back and say, hey, this might not be a possibility based on what's really happening out there, okay? And you're just not seeing inflation back on track. We've seen it stall, if not tick up a little bit over the past 3 to 4 months, and that's a big issue, okay? And, again, you have to be able to pivot. And when I look at this, I'm like, I don't know if they're going to be able to cut if we're just not even making progress now. Now, do I think they're going to raise rates? No, I think if you think they're going to raise rates, I think you're wild. I think you're wild thoughts, Rihanna, right? That's absolutely crazy. But again, I don't think that rate cuts they're not going to talk about rate cuts at this meeting. It's just unlikely right now. It's just very, very, very unlikely. So I think this article from Reuters, it's a little bit biased, right? I'm going to be honest. And guys, y'all know I'm the biggest bull of them all, right? I'm not saying go short on the market right now, but I'm just saying that this is just a little bit unlikely. Okay, I don't know if we're getting they're talking about cuts after the data that we've just had. Okay, worth mentioning, we're talking about PCE wasn't that bad though. What I will say. Let's look at some of the data here as well. Now I want to go to Yahoo Finance to just paint the picture because I think this is the best way that we can look at volume, and volume is our best friend. Now we have noticed that volume's been pretty terrible, right? You've had one surge, but that was about it at the bottom. You bottomed out, great volume, and that was it. Okay. And then just crappy volume since then. I mean, yesterday was pathetic. This is just pretty crappy volume. I want to just show you, though, what's happened over the past few weeks. And I think volume gives you the best answer. Over the past year, give or take, right, your volume upticks throughout the week. Mondays, no surprise if we get a low volume day on Monday. But we always uptick, okay? Very important to understand that, right? There's all types of ways we can look at this data. But the volume clearly, it upticks, but then it just dies down. Friday was pathetic, right? Friday's never our lowest volume day, okay? So those are things to consider as well. Also, too, going to FOMC, we've seen this type of price action before. What usually happens? What happens on these red and green days, right? Tuesdays, the day before FOMC, the big data readings were typically red. Wednesday, it's back and forth, 50-50 going into it. Mondays are typically our best days. But those are things to consider, right? Is what's happening into that, Fed meeting those days there. And so I always tell you, when we're going into these meetings, going into the data, take your wins when you have them. Stop over swinging, stop over trading, because going into this data, craziness happens, right? We've seen the big drops, then the big pops back to the upside. So again, that's what I'm looking at here, what I'm trying to visualize, and hopefully for you to understand as well. Now, let's quickly go over some equities, things I'm liking along these lines, okay? I wasn't able to make a video yesterday. I was busy. We're in New York, things happening there. So let me get rid of volume here just so we don't have to look at that. So let me make it a little bit cleaner, bring that down, and let's get to work. So number one, we're going to look really quick at Tesla because I had a really nice pop. If you don't know, Tesla basically got FSD approval for China. Very big bullish news, right? Now for Tesla, you got to mount above 194. That's been our key level for I don't know how long. So 194 is everything. To get bullish, you mount 194, you push up, you have room to your 200, your 200 weekly and your 200 daily. So very awesome behavior potentially, but again, until you get above those levels, you can't really get bullish on Tesla, if that makes sense. Baidu. Now, Baidu is one of those really interesting names for me. I think it might be one of the biggest opportunities broad market. If I look broad market, I think it has some of the best potential. Now, I will say it is going to be highly risky. There's going to be a few things that I have to talk about here with Baidu that's risky. Number one, it's a Chinese name. Chinese names have been the riskiest names out there. If you don't know why I like Baidu, it's because the only reason why Tesla got the FSD approval is because they partnered with Baidu. Worth mentioning in China. But if you look here at the weekly, look at this. I mean, you're at like massive support. $93 to like $85 is just huge support for like a stock move there. And so when I look at Baidu, I think like stock is just the way. Like I think if you're going to play it, it's a stock play. Chinese markets are also bouncing as well. Very interesting. So those are things to consider. I think China is risky though. China, you need to understand that. If you're going Chinese names, very, very risky assets. Okay, I'm not going to lie to you. But when I look at the opportunity, it's very interesting, especially if FSD starts to take off and we get more reports out of China as well with that. Riskier name. You guys like hearing some risky names, but yeah, those are interesting. Again, I'm going to talk about names I like on this dip so I can be really clear about that as well. But I will say Apple too. Apple, what a day. What like past 2 days. Apple here, you get this nice move yesterday, gapping up. You're filling the gap back down. So Apple, again, we've been talking about you got to get back above the 200 SMA to be bullish. You have earnings on Apple on Thursday. Be really patient. Let's wait to see what Apple says from earnings. I think they might have something up their sleeve for earnings, but again, not trading Apple until they have those earnings. But again, top watch for me. Really quick, ARM. ARM is going to be a good watch based on AMD's earnings. If ARM dips, I'm really looking for stock to buy near $80. Near $80, I think it's, again, massive value opportunity, personal opinion. Again, you're looking for that gap to get filled finally back down to $80, $79. At that point, really big opportunity. Can say nothing but good things at that point. I really like where it's at. Could be great. Definitely paying attention to that. NVIDIA, again, all your levels have been just clear as day here, right? To get bullish, you got to get back up at least above 906, 908, 97. 924 to get really bullish. You're kind of just bull flagging here, broke down. Of course, it's affected by AMD's earnings. Probably makes a move back to the downside, I would assume, towards 841 tomorrow. But again, I expect chop tomorrow. I don't expect clear-cut downside. I expect it's going to be ugly with FOMC. We need to hear what's said from the Fed's mouth. I'm telling you, if the Fed surprises us, and we've seen this happen before when we expect a lot of bad stuff to be said by the Fed, and then they come out and they're bullish and they're this and they're that, and the market just gets flipped upside down. So I'm telling you, be patient, be patient, be patient. Especially with names like NVIDIA. I know people want to jump on the hype train and go short and this and that. NVIDIA's earnings in 2 weeks. You have plenty of time. So again, I think people might get caught with their pants down here, and you don't want that to happen in the market. I don't want that to happen to you. Okay, so things to consider, things to be watching for. Amazon earnings obviously doing well. You just want to hold above 180. Above 180, you'll look fine. Again, we got that that ascending triangle. You broke out towards 190. That was awesome. But now you're getting another opportunity. Great earnings, right? But I will say, we've seen this story happen before, right? Let's go to Microsoft, for instance. They reported last week. Great earnings, smash, move up to 415. Well, guess what? The market pulls back and Microsoft pulls back with it, back down to lows. Does that make Microsoft bad? Does that mean it had bad earnings? No. That just means the rest of the market pulled back. So those are things you have to be considering. Like, I like Amazon, but I'm not going to go long on Amazon options if the market's pulling back. So again, the biggest thing I can say out of this video today is be patient for FOMC. We want to listen to what he said. I'll be live most likely tomorrow for you, for FOMC as well. But be paying attention because, again, I think that's what's going to be what really shifts the market over the next few weeks, especially into the next big pool of data. Things to be considering, things to be watching, what I'm paying attention to. If you have questions, comment down below. I'll see you guys tomorrow. Have a good one, traders.